All right, so I just wanted to come on here and talk about the market as a whole. As of recently, the last week or so, a little more than a week, it's been doing especially poorly. We've been seeing, pretty much a 10% gain loss this week, and then year to date, we're down 13.5% in the S&P, down around 17% from all-time highs, and that's not good, obviously. And it's a scary time to be an investor. But I wanted to share, kind of where I'm coming from and how I'm navigating these really, really tricky conditions. Obviously, this is something that we very rarely see, such a big drop. And this is, due to the tariffs that Trump is administering. That's sending a lot of fear in the market right now. And pretty much all stocks are going down. There are a couple that aren't, but pretty much all of them are. So it's a very scary time to be an investor. You look at this chart here. I mean, we are dropped significantly from these highs around 6,100 down all the way to 5,000. And all this year's worth of gains here. You see, we're back to April 26th is kind of when we saw these gains. Even going back further at the year in last March, you see that these numbers. So again, a full year's worth of returns, and these are solid returns, just wiped out. So obviously, it's scary. If you have disclaimer, if you have a short time frame for investing, it is going to be much, much more scary for you to be in these conditions, because honestly, no one has any idea what's going to happen in the market in the next few weeks, few months, even maybe a couple of years, because these tariffs are lots of uncertainty is paired with them. But if you are a long-term investor like myself, and probably many of you, this is honestly not that bad of news. It's obviously very scary to look at your portfolio right now. I know I get just scared when I look at my portfolio, seeing all my gains being wiped out. But you kind of just have to realize that, it sucks that your portfolio is going down, but this does present an amazing opportunity to buy stocks. Because honestly, this obviously happens rarely, but you see all these major drops here. You see, obviously 2008, you had the big crash. You saw a 50% drop. And, it rebounded. And, obviously it's scary in the moment. You want to sell everything. You want to cut your losses, whatever. But the number one thing that you can really do, and the only thing as a long-term investor that you can do that would ruin this for you and that would truly make you lose in these situations, is selling and thinking, especially where we are now, oh my gosh, I'm already down 15%. I'm just going to sell and cut my losses. That is not smart at all. Yes, we can keep going down, and we probably will keep going down a little bit. We've already been down a ton, so I don't think there's a ton more left. Maybe we'll see a couple more awful weeks, but there's not a whole lot left to be dropped, unless we're seeing a huge recession where we see a 50% drop, which even in that case should not be selling. But if you're not selling, as long as you don't sell, it'll be back up. And then that's happened every time. That'll continue to happen. I am certain of that. The market will continue to bounce back. It's not going to drop to zero. That's not going to happen. You see this happen in 2020. It also dropped. Obviously, you would have felt awful if you sold here or whatever. But if you kept it, if you were patient, and if you just realized that these are temporary losses, you would be up. And it would be relatively quickly. Same as 2022. Great buying opportunity. If you sold it, it would have been awful. But if you bought more at the bottom and you held when you had all your investments at the top, you'd be doing fine. So the same thing applies here. If you're a long-term investor, do not sell your stocks. That is for sure. You will just end up regretting that later. Keep the stocks that you had before and buy some more. I don't know. I would not buy now personally right now, but I think you wait a little bit more for some of this uncertainty to kind of simmer down a little bit. You're going to see, obviously right now, we saw, Thursday, we saw 4% loss, 5% loss on Friday. That's not sustainable. That's not going to happen every single day. I guarantee you that, because otherwise the market would go zero. So, you're going to let it simmer down a little bit, see lower and lower losses every day as the market, adjusts and the price is more relevant to what we're dealing with right now. The market will stop dropping these huge percentages, and then you can start buying the stocks. And I have a couple picks that I've been looking at for stock picks, and it kind of depends what you want, honestly. There are two types. There's obviously big name stocks that are hugely discounted right now, and that are great and going to be great investments for the future, but that are hit pretty hard by the tariffs, whether that's with their business model or whether that's just overall consumer sentiment, and their stock is just hit hardest. And there's also stocks that are largely unaffected by tariffs. And this would be these would be stocks that are going to, maybe not go down as much in the future. A lot of these stocks even have gone down recently, but once the market simmers down, they should be back up. And I have some examples of each of these types of stocks. But it depends what you want, honestly. I feel like both, it's a good mix to have both, but in such troubling conditions, you want to have, a good mix of those, resistant stocks, but also stocks that are cheap, really discounted. And, at the end of the day, you're never going to find the bottom of this dip. It's kind of, it's impossible to do so. You're never going to know exactly when the bottom is, but, it's better to buy, maybe not now, but in a little bit. You buy over time. You can dollar cost average is when you buy over multiple time periods. And hopefully you find somewhere close to the bottom, and then you see the rise and you get great returns from that. So in terms of a stock that is relatively resistant to tariffs, I don't want to have to talk about a completely new stock. So I just thought it'd be good to mention Gorilla again. Gorilla's, first of all, is a foreign company. They're largely based out of the UK and many other countries in Asia, whatever. And they offer, a big thing with Gorilla is that they don't offer a product which they're selling overseas, and that would be hit by tariffs. They offer a service, and that's, their smart city building. They build that within the cities, so that is completely unaffected by tariffs. And they're not selling anything overseas, so there's nothing to worry about with Gorilla's margins or anything being affected by tariffs. The only issue with Gorilla, which you saw recently, you saw their earnings being posted. I made another video on that. Their earnings were great. They were amazing, actually. They saw huge gains in their revenues. But the problem was, right after their earnings were released, short sellers got to Gorilla again. This happened when Gorilla was at like 40, and then Gorilla went down to around 25. They're rebounding a little bit, but then this new firm called Culper's Research came out with another article. And this article was basically saying how Gorilla was completely fraudulent. Every single part of their business was fraudulent, and how, everyone should short them and no one should invest in them. And there's obviously, if you're looking at it just from a basic point of view there, it's concerning because, oh my God, this company might be completely fraudulent and all my money's going to go to waste. But if you do a little bit of research, you'll see that this Culper's Research is a completely fraudulent firm. They're completely anonymous. They have 0 employees that are named. They obviously are known for short selling. So they took a position short in Gorilla after realizing that the entire market was crashing and it's very hard to get good returns in such an awful market. So they saw Gorilla, which is a very small cap stock. So it's easy to probably manipulate the price with little bad news. And they did that. They released an article. And if you do a little research, you'll see they created a fake LinkedIn to try to prove Gorilla's deals wrong. They tried to, fabricate a bunch of fake ideas with the Gorilla's business and how everything they're doing is a lie. They made up fake stories, whatever. You can look deeper into it. But in the end, this happens often with Gorilla. The big thing is that, they're not affected by tariffs. Their business is not struggling. It's just these short sellers that are getting to them. So right now it is at a very discounted price, around $17. I would highly suggest buying still. Obviously, you should do your own research on if you really think it's a fraudulent company. If you do, I wouldn't buy them, but I am very confident that it is not a fraudulent company. It's obviously these short sellers are trying to manipulate the market for their own good. Being in such troubling conditions with the market, it's obviously easy to see a small company like Gorilla and use their the smallness of the company for your own good. So Gorilla is a stock that is largely going to be unaffected by tariffs. So if you want something like that, go after Gorilla. But I have 3 that are going to be bigger companies here. They're bigger companies that are going to get hit hard when the market gets hit hard, but they are going to be great investments for the future. And if you can just wait for them to maybe bottom out a little more and then invest in them, I guarantee you it'll pay off. So first one's Meta. I've been looking at Meta for a while. I'm not going to do a full out pitch on it, but just know it's a very profitable company. It's a growing company, and you just look at their charts. It hit 700, 750, whatever was the price a little while ago, and that was a good price. Maybe a little overvalued, sure. Right now they're sitting at $500. 20 price to earnings ratio for a tech stock is insanely low. They pay dividend, and their market cap is pretty low for how big of a stock it is. It's only 1.28 million. I think it'll keep going down a little bit more. Maybe we can see the 450 level being tested, but once it hits that, or you see maybe it rebounds up a little bit, I would buy. I think in a few years it could easily retest these 750 levels and go higher. I think it'll split again and go to 1,000 eventually. So this is a great long-term investment. Meta's not going anywhere. Facebook's not going anywhere. So nothing to worry about with that. Next one's Amazon. Everyone uses Amazon. Amazon is going absolutely nowhere. You go to the yearly levels. You see Amazon tested 250. We're at 170 right now. I think it might retest the 150 levels that you saw it hit in August, 160 levels. But once you see it going there, or if you see it bouncing up again, I would invest 100%. Amazon is going nowhere. Its price to earnings is down a ton. It was at like 40. Now it's at 30. So even cheaper. And again, Amazon is going nowhere, no matter tariffs or not. Obviously, it hurts them for tariffs, but if in the long term, it'll most definitely be back at those 250 levels at some point. And then lastly, Google. Again, everyone uses Google, and their price to earnings ratio is down to 19 for a tech stock that is insanely low. They tested around 200 levels. They're at 147 right now. I think it'll go on a little more again, but once you see it start bouncing back up, I would definitely press buy and buy a good amount, because I think Google could easily go up to 250, 300, 350. It'll just keep testing more and more levels. And this is just some of them. This is just three of the ones that I'm looking at. Obviously, you could look at basically any stock and press buy on it. They're all very discounted. As long as it's a good company, as long as it's a good company, and they're really the only reason they're going down is because of the tariffs and not some sort of inner business problem, I would definitely buy them. Once it'll go down a little more. I think it's a little early still, but you wait a little bit, and the markets will hopefully simmer down a little bit. But just remember, do not sell anything. And I have a couple picks, but really just use this as a buying opportunity if you're a long-term investor. I know I will be. I have to get a little more money, though, because I pretty much put all mine in stocks already. But, these are great buying opportunities. If you missed out on a year's worth of gains, if you were a little late to the AI bubble, whatever, now's your chance. You basically just got a full factory year reset, more than a year reset. So, obviously it's bad news if you're, you only have a couple more years to invest or whatever, you need the money. But if you're a long-term investor, it's obviously scary, but it could be worse. And it just presents a great buying opportunity. So keep that in mind. Let me know what you think. Let me know if you're going to buy any other stock soon, or if you're going to wait a little longer. And thanks for watching.